What's going on, everybody, and welcome to a little Saturday EDU session. We're going to talk about the difference between retracements and reversals. Now, this topic has been brought to my attention and covered pretty extensively over the past few weeks inside the group. Okay, and this was a very big learning process for me, and I see this issue happening a lot with newer traders. Like I said, it took me a long time to get away from this very bad habit. There are two things that are happening. One, your entries are very poor, okay, and you're buying something when it's overextended. And then two, you're trying to time a reversal when in actuality, it's just a retracement, okay? So before we get into it, let's cover the difference between a reversal is a trend change, and a retracement is simple a trend continuation. There's just a shorter time frame, little retracement where the price moves in the opposite direction, but over the larger time frame, it's going to continue in the same direction. Okay. Now, reversals have their plays inside the market. Okay, I do play reversals. Or the biggest thing that attracts me to reversals is it has a very good risk reward. Now, what do I mean by that? Okay, when you are buying a reversal, you're buying something that's opposite of the trend. Okay, meaning if the price is moving up and it's been moving up for quite some time, you're trying to time the top and you're going to be buying puts at that side or buy the downside. Now, if you have good risk management and it breaks over another level to the upside, you can cut very quickly. You're not going to get hurt that bad when it comes to a percentage loss. However, if it does pivot at that point, okay, and it does start to break down, your upside potential can be very, very lucrative. That's what I mean by it offers a very good risk reward. However, after years of doing this, okay, and after many losses, there's a couple things that are going to happen. One, you are fighting trend, okay, and you're trying to time a position. It is not a very good strategy for long term. Now, it's a little bit different than playing supply and demand, which supply and demand can be very lucrative. I'm talking specifically, playing reversals. Now, this is something I've shared with the group, and I'm going to break down everything for you. We're going to go over a little bit of larger time frames, and I'm going to share with you the mistakes that I made for a very, very long time. And I hope that you don't, really continue to make these mistakes if you are, and I hope this helps or just brings another strategy to your arsenal. So this is yesterday. Now, a lot of people on Twitter were bullish after the massive move on Thursday, okay? But here's just a shorter time frame, and I want to cover this. So you see the price starting to move down. We hit a little bit of a double bottom here, and it starts to curl back up. So there was a time where I would buy calls literally right here, and I would say we're going to move back up. Okay, maybe I didn't have EMAs in my chart, which we'll cover in a moment, but I literally would buy calls right here, and I would look back and I would say, what the hell? I literally bought at the top. Like I was trying to time this reversal. Okay, fast forward to just over the past few years, I follow the 21 the 921 EMA pretty extensively. Okay, I don't look for EMA crosses because a lot of times they lag. Okay, but I do look for rejection and for trend continuation. Okay, so very clearly you could see on a shorter time frame we are moving in a downtrend, and what at one point I used to think this was a reversal. Now I know this is just a retracement. So long as it rejects this EMA, I'm buying more downside, looking to follow that trend. And when you start to look back at your position, you're saying to yourself, awesome, I literally had an amazing entry. Okay, so let's take a look at a little different scenario. This is something I shared with everybody inside the group. This is going back towards October 7th. Okay, and it was a very similar thing. We had a big move to the downside. We broke some pre-market supports and some bigger supports, which I'll talk about in just a moment. Okay, we bounced off, a nice 364 level, started to move more up to the upside. We rejected off of this. We got puts at an amazing entry. Okay, so let's take a look back on a larger time frame. So there's really four time frames I like to look at. I like to look at the weekly and the daily for critical support levels. I like to look at the 30-minute and the 1 hour for candle formations, as well as, medium term support and resistance. So let's break this down. So first of all, where my arrow is right now is that day, October 7th. Okay, so this is something where I looked at. I always say to everybody, look at your larger time frames. So as you can see, I have this red line that I did make on the last video I started making, which I had to stop because I messed up on. But this is a very critical level, and as you can see here, we rejected as was resistance. We broke through it on a nice solid uptrend. what was once old resistance likes to be confirmed as new support, which it was all the way back on the 5th. We continued to move to the upside, and then early pre-market on the 7th, we broke that critical level of support. Okay, so I always look for reversals as breaking of critical level of supports, which we did have an uptrend, a little bit of consolidation. Now we're moving into a downtrend. Okay, so I'm looking to capture the downside move. Okay, now when I go back to this chart on a shorter time frame, maybe I didn't get into it right away. I don't want to be buying puts, okay, as we're really far from, away from an EMA. And like I said, I like to use EMAs as just, following the trend. I do not use them for crosses, okay, or when they're sandwiched like this, but really just to, get better entries and following the trend. So when it is a little bit overstretched, maybe I have a rule that I don't take trades in the first 30 minutes because it's very volatile. Whatever it may be, in my mind, I am thinking to myself, I want to continue to play the downside. We broke that critical level of support. We have my larger time frame confirmation, and here's exactly what I'm looking for. So at a time where I would literally be buying, okay, the complete opposite, I continue to buy to move to the downside. So here's just a little bit more of an explanation of this. It's, I call it the EMA reject along, with levels. I always used to try to catch the bottom and would find myself waiting for confirmation of a reversal just to find out I literally bought the top. This is because I was not looking at larger time frames and not understanding market structure and fighting the trend. Okay, so you can pause this and read all of this. Okay, this comes from my confirmation. You could look back at the 7th. I hope this video helps. Like I said, I use the 9 EMA, the 21 EMA, and I'll also use the 200 EMA really as just kind of like an over under. If I'm over the 200, all right, it's more of a bullish setup. If I'm under, it's more of a bearish setup. But like I said, I really like to use the 3-minute and 5-minute and really just look for that trend continuation. I'm not trying to time reversals. This is yesterday, okay, and I swear I watched this. I literally entered puts right here at that reject. If it does move above it, okay, I can cut right here, and I could also use this as another barrier. All right, but it's a very solid strategy for me. It's something I've been doing for a while. And I've been sharing this inside the group, and I literally thought to myself, there was a time years ago where I would buy calls 100%. I would look back and I'd be like, I literally bought the top. Like, what did I miss? But I would continue to do it again and again. So I hope this video helps. Feel free to leave a comment down below, ask any questions. Okay. You can also look up the difference between a retracement and a reversal and understand, where price action, and how it works. And just, it's just natural. Nothing can move in one direction for too long. It continues to take a breather. It kind of pops back up. However, you look on that larger time frame and you can see that we are moving, okay, to the downside. You look at the hourly time frame, there's a big reversal, okay, right here. You do have some support around that same 364 level, okay, that I had mentioned, even going back further in this video. But that same 364 level, we broke through that. It kind of held, all right, old resistance became new support, came back up. We smashed through it. Now we're looking for a trend change. This is, a trend reversal. Okay, so guys, like I said, I hope this video helps. I'll see you in the next one.